What is going up, everybody? I hope everybody's having a great day today. We're going to be talking about the one and only Disney stock. So a lot of people have been talking about this stock, and so I'm like, screw it. I'll make a video about it, kind of explaining why I will never sell this stock. So pretty much, for those of you that don't know what Disney is, I'm sure everybody does, but they are a giant. They are pretty much just a media giant. They own a ton of different things. They own, Marvel. They own Star Wars. They own almost everything, guys. So what do I see? We're gonna talk about the fundamentals and technicals, looking at the stock chart. Then we're going to talk about future growth, what I see going on with it. All right, so looking at this stock, it pretty much, we can easily see it has a low of roughly $97 and a high of 120. This is on the yearly chart. So obviously this past year it has been a little choppy. We had this huge sell-off breaking through this yellow line. For those of you that don't know what these lines are, these are moving average lines. So pretty much what they mean is they take the closing prices of however many days you set it for, and it averages all of the prices together. So the yellow is the past 200 days. The this little pink line is the past 90 days, and then this purple is 20, and then this one is 9. So pretty much the lesser the amount of days are, the more that it hugs the candles, and these moving average lines act as support or resistance points. But looking at this stock, it does use it, and then sometimes obviously they break through. But all right, so looking at this, we can see that it does pretty much like to hug this 200 moving average line. Just by saying we had this little sell-off breaking through here before it tapped it and fell, push back up, fall back, tap this 200 again, push back through. We had some sell-off last August. Then we had a bounce off the 90, and then it bounced off it again, and then broke through. So right here, this would have been the best short opportunity on the chart, at $111 going short. Yeah, so pretty much it doesn't use the 200 moving average as much, but obviously in some cases like here it does. But that's kind of make this easier for you guys. So this is where drawing tools. Alright, so pretty much here, this is where we had one hit, we had another hit here, pretty much just all right here, guys. And we had a little bit of a pullback here, and then it sold off, and then as you guys can see, it tapped it again before it sold off. So looking at it, we can pretty much judge that it does use the 90 a lot more than the 200. But alright, so now let's talk about what I see in this company, guys. So pretty much, for those of you that don't know, Disney has recently been pushing to get out of Netflix, which is good. It's good for them, but it's also, you can see both sides on it. So pretty much looking at it, Netflix is already a streaming giant. They are one of the fastest growing companies over the past probably 11 years. One of the fastest growing companies, stock going from roughly $14 to $400 since 2008. But so they're already a giant. So they already have millions of subscriber bases. Rather, Disney has 0, but that is just because they're pushing out. Disney wants to get out of Netflix. Okay, Netflix does not care. Netflix would like them, but it's that same point where Netflix is already coming out with new shows, new movies, so they want to do their own thing. And Disney said, screw it, let's get out of it. So now, as you guys can tell, many of the popular TV shows or movies have pushed out of Netflix. And yes, that might hurt Disney for this year because they won't get as many attractions, and they won't, many people won't see their movies as much. And you might be thinking, oh well, if let's say 1 million people don't see those movies, is that really a big deal? Well, yes, it is, because Disney is more than just movies. They also have the theme parks. They also have toys. So if let's say Disney comes out with a movie, and it's let's say they come out with Moana 2, and they don't put it on Netflix, and there's already hundreds of millions of people that are on Netflix, guys. So when they do that, they're kind of losing all of those people that would watch it and then get tuned into it with kids, and then they would go visit the theme park and they would buy toys. So it's pretty much just a domino effect. So if let's say your kid watches it and they watch it on Netflix, then they will like the show, so they will want toys, and obviously Disney has toys and shirts, so then the parents will buy that, and then they will have something at the Disney theme park. So pretty much doing that, that's where we've had this sell-off here, because this is where they stated that they were going off Netflix, and obviously we had this huge sell-off and then a little bounce back up. But so realistically, it'll be okay in the long run, but they're obviously gonna have some troubles. But I think their streaming service is gonna be perfect for people with kids, and I'm excited about it. They're starting that sometime this year, I believe, and that will look fun. I'm excited about that. Another thing is Disney closed 2018 with its strongest year of growth, which is incredible. So pretty much it really can only go up from here. They own so many of the most popular movies, and in 2019 they're releasing 5 or 6 blockbuster films, like the Avengers, Star Wars, and many other kids shows. But so that's going to be exciting, and obviously that will just boost up their sales more. So it's pretty cool. I'm excited about this, guys. It'll be fun. Another thing that they are doing is they are doing. So when you go to Disney World, that it's more kid friendly. They're trying to push towards teens, which is cool, because now they're doing more Star Wars hotels and other things like that. So I mean, it's not big, but realistically it will be cool. Another thing is Disney always has been very passionate about its dividends, giving out 1.5% per share. So that is roughly two what would that be, $1.09 right now per share, which is good. So if you have 100 shares, it adds up, guys. It adds up. Obviously 100 shares would be a lot, but at the same time, it's not too bad. But yeah, so Disney's always been really good about its dividends. So, and it's supposed to keep doing it, which is good. Another thing is that Disney is bullish. So that means bullish means up. So Disney is bullish on ESPN, because for those of you that don't know, Disney also owns ESPN. So over the course of the past century, it has gained them $19 billion in capital. So right there is just really, really cool. Yeah, so I mean, Disney's one of those stocks where it doesn't move a whole lot, but it is just slow and steady. And you always hear about Disney. So looking down here, guys, on this chart, you can see. Here, let's move myself here. So here are all the news events, guys. So this one right here, Marvel Studios Captain America, to be released in Screen Sets or Screen X. So we can really just see, just it always has news, and it's pretty much just one of those stocks where it just keeps on putting out things, and everyone's like, oh my, they bought that. Why would they do that? And it just really a large company. It is a media giant, guys. So that is the end of this video. I hope you guys learned something. If you did, please drop a huge like on this video. Please subscribe down below if you guys have not already. So that is it. Remember to stay happy, stay positive, and I hope you guys have a fantastic rest of the week. Take care, everyone.